In this video, today we will talk about earning money for real estate can be a lucrative way to build wealth and generate passive income. Real estate offers various strategies and investment opportunities, each with its own potential returns and risks. Here's a comprehensive video on how to earn money from real estate, covering different approaches and providing practical advice for success. How to earn money for real estate. Real estate investing is a popular way to build wealth and generate passive income. Whether you're interested in residential properties, commercial real estate, or other forms of real estate investment, there are multiple strategies to consider. 1. Rental properties. One of the most common and straightforward ways to earn money in real estate is by purchasing properties and renting them out. Rental properties can generate a steady stream of passive income, while also appreciating in value over time. Whether it's residential or commercial real estate, the key to success in rental properties lies in choosing the right location, understanding market demand, and effectively managing the property. Residential rentals. Purchasing single-family homes, apartments, or multifamily units and renting them out to tenants can provide consistent monthly income. The rental income can cover mortgage payments, maintenance costs, and potentially leave you with a profit. Over time, as the property appreciates in value, you can sell it at a higher price or continue to collect rent. Commercial rentals. Investing in commercial properties such as office buildings, retail spaces, or industrial warehouses can be more complex but often offers higher returns. Commercial leases tend to be longer and more stable, with tenants often responsible for property maintenance, making it a less hands-on investment. 2. Real estate investment trusts, REITs. For those who want to invest in real estate without directly owning or managing properties, real estate investment trusts, REITs, provide an excellent option. REITs are companies that own, operate, or finance income-producing real estate across various sectors, including residential, commercial, and industrial properties. REITs are also highly liquid, meaning you can buy and sell shares easily. Much like stocks, this makes them a popular choice for investors seeking diversification and passive income. 3. House flipping. House flipping involves buying a property, renovating it, and then selling it at a higher price. This strategy requires a keen eye for undervalued properties, strong negotiation skills, and a good understanding of the real estate market. While house flipping can be highly profitable, it also comes with risks, including potential cost overruns during renovations and market fluctuations that can impact resale value. To succeed in house flipping, it's essential to conduct thorough research, estimate renovation costs accurately, and have a clear exit strategy. Partnering with experienced contractors and real estate agents can also help you navigate the challenges and maximize your profits. 4. Vacation rentals. With the rise of platforms like Airbnb, vacation rentals have become an increasingly popular way to earn money from real estate. Vacation rentals involve renting out a property to short-term guests, often in tourist-friendly locations. This strategy can generate higher rental income compared to traditional long-term rentals, especially in peak seasons. The income can be more variable depending on the season and occupancy rates. To succeed in this market, it's crucial to provide a high-quality guest experience, maintain a competitive pricing strategy, and comply with local regulations. 5. Real estate crowdfunding. Real estate crowdfunding allows investors to pool their money together to invest in real estate projects, typically through online platforms. This method provides access to real estate opportunities that might be out of reach for individual investors, such as large commercial developments or multifamily properties. The returns from real estate crowdfunding can be attractive, but it's essential to understand the risks, including potential project delays and the illiquid nature of the investments. 6. Buy and hold strategy. The buy and hold strategy involves purchasing properties with the intention of holding onto them for an extended period while they appreciate in value. Investors using the buy and hold strategy often focus on properties in growing areas with strong potential for future demand. 7. Real estate development. Real estate development involves purchasing land, building new properties, or redeveloping existing ones. The development process typically involves acquiring land, securing financing, obtaining permits, overseeing construction, and eventually selling or leasing the finished properties. Successful developers can earn substantial profits, but the risks are high, including potential delays, cost overruns, and market downturns. 8. Real estate wholesaling. Real estate wholesaling involves finding distressed properties, getting them under contract at a discounted price, and then selling the contract to another buyer for a profit. To succeed in wholesaling, you need to build a strong network of motivated sellers, cash buyers, and real estate agents. It's also important to have excellent negotiation skills and a deep understanding of your local market. Wholesaling can be a fast way to earn money in real estate, but it requires persistence, hard work, and the ability to close deals quickly. 9. Real estate syndication. Real estate syndication is a partnership between multiple investors who pool their resources to purchase and manage larger properties or development projects. A syndicator or sponsor typically manages the investment, while the investors provide the capital. This allows investors to participate in larger and more complex real estate deals than they could on their own. Syndications can offer attractive returns, including cash flow from rental income, appreciation, and tax benefits. It's essential to thoroughly vet the syndicator's track record and understand the terms of the investment before committing. 10. Lease options. A lease option, also known as a rent-to-own agreement, is a creative way to earn money from real estate. In a lease option, a tenant agrees to rent a property for a specified period with the option to purchase it at the end of the lease. The tenant typically pays an upfront option fee and a higher-than-market rent, with a portion of the rent credited toward the purchase price. This strategy allows investors to generate rental income while securing a potential future sale. They also attract tenants who may not currently qualify for a mortgage but are motivated to buy in the future. Conclusion: earning money from real estate offers numerous opportunities, each with its own potential benefits and risks. Whether you choose to invest in rental properties, flip homes, participate in REITs, or explore other strategies, success in real estate requires careful planning, research, and management. By understanding the different methods and aligning them with your investment goals, you can build a profitable real estate portfolio and generate income over time. As with any investment, it's essential to stay informed, adapt to market changes, and seek professional advice when needed. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.